Thank you all for coming to this panel, lovingly entitled When ETF. My name is Jake Chervinsky. I'll be moderating the panel with my fellow esteemed panelists. As you all probably know, since you decided to come to this room, we in the crypto space have been waiting for the SEC to approve an ETF for about 6 years now, ever since the Winklevoss brothers first proposed an ETF back in the middle of 2013. But unfortunately, time and time again, the SEC has rejected ETF applications primarily for one reason, which is market manipulation. So we're going to spend about the next 30 minutes talking about why ETFs are important, why the SEC hasn't approved one yet, and what it's going to take to finally get one through. But before we jump in, I'm going to ask my esteemed co-panelists to please introduce themselves and tell you a little bit about their work.
Great, sure. I'll start. Matt Hogan. I'm the Global Head of Research at Bitwise Asset Management. Bitwise is a specialist crypto asset manager, created the first crypto index fund, and is, I believe, first in line at the SEC for review of our proposed Bitcoin ETF. Before I joined Bitwise in January 2018, I was the CEO of ETF.com, spent 14 years in that industry building the largest media, conference, and data business in that space. So I've been in and around ETFs and crypto for most of my career.
So my name is Tony Seo. So I look after marketplace regulatory technology at NASDAQ. So we're interested in this less from a trading perspective, but more as a provider of surveillance technology and regulatory technology around market manipulation, both for our current markets, but also currently as a provider for a lot of the new crypto players out there.
And I'm Keith Miller from Perkins Coie in New York. I'm the managing partner in New York, and I helped start our blockchain industry group in 2012. I'm a former SEC enforcement attorney in New York, and I represent a lot of players in the field.
Great. And again, I'm Jake Chervinsky. I am formerly a securities litigator at the firm of Cobre & Kim. I will be starting a new position in a couple of weeks, so stay tuned for news about that. So let's jump in. Matt, I'm hoping that you can get us started, given your work at Bitwise. I think everyone has a general sense of sort of what an ETF is and why it's important enough for us to have a panel like this, but maybe you can set the stage for us a little bit and tell us what is an ETF, what is the Bitwise's proposal, and why is it so important?
Sure. So an ETF is an exchange-traded fund. It's like a mutual fund, but it trades like a stock. The Bitwise Bitcoin ETF proposal is the simplest Bitcoin ETF proposal that's ever existed. It's like the pet rock of Bitcoin ETFs. All it does is it holds Bitcoin in an insured, regulated third-party custodian, and then people can buy or sell those shares on an exchange like a stock. In the history, over the course of the years, a lot of people have proposed Bitcoin ETFs. They've all had various sort of cute nuances. They've held futures, or they priced on a single exchange, or they only priced from OTC markets. Ours is the most simple it can be. It's like the gold bullion ETF. It just holds Bitcoin. It draws prices from every real Bitcoin exchange in the world, and it allows you to buy or sell Bitcoin on a regular stock exchange like a stock. Yeah, so that's what it does. Should I explain why it's important, I think?
Yeah, I think what people really want to know is, obviously there are other ways to buy Bitcoin now. Why does it matter to add this additional way for people to get exposure to Bitcoin through an ETF?
I think that's great. And the thing is, people don't understand the reason for that. They get it wrong all the time. So the one reason that people point to is that it would build trust in the system and it would make it easy for individuals to buy Bitcoin. It is already easy for individuals to buy Bitcoin. There are dozens of apps, they're high quality, you can go out there and buy Bitcoin. The real reason a Bitcoin ETF is important for the industry is a word that hasn't been spoken at this conference, which is financial advisors. People in the crypto world love building for retail investors. There are a million apps out there. Retail investors control about $3 trillion of wealth in the US. Financial advisors control 21 trillion, 7 times. And the crypto market is not focused at all on the financial advisor market. And financial advisors aren't going to put clients into ETFs through an app, into crypto through an app. They need a fund structure to do so. So the primary reason an ETF is really important for crypto is it will open up the bulk of the US wealth market and make it possible for them to invest in crypto for the first time.
I think that's really helpful to get the context for why there's been so much effort put into getting an ETF passed. Let's talk a little bit now about why there hasn't been one approved yet. And Keith, I want to turn to you, especially given your work at the SEC. You're a former Division of Enforcement lawyer. As I mentioned, the main reason that the SEC hasn't approved an ETF so far is because of their perception of market manipulation. Can you tell us just a little bit about what kind of market manipulation the SEC is concerned about and what they're seeing in the markets that are stopping them from moving an ETF forward?
Yeah, first of all, I think there's a misconception. It's not just manipulation that the SEC is concerned about. I think there's four main concerns. I would bucket them into categories. One is valuation. Is there sufficient information to value the cryptocurrency given the volatility and given the lack of regulation? And this goes back to what Matt just said in terms of registered reps and the ability to sell. One of the issues for registered reps is suitability. Do they understand what they're selling to their clients? Do they understand it, and can they vouch for the credibility of it? So that's one issue is valuation and sufficient information to be able to give investors information about it. How do you value a fund, for example, when there's a fork, another issue that has come up? So valuation is one main issue that the SEC is concerned about besides manipulation. Liquidity is another issue. How does a fund implement liquidity risks? A lot of funds have to comply with various statutes and regulations regarding liquidity. Are cryptocurrencies liquid enough? Third issue that I would say is custody. We are hearing about this all the time. To ensure that the cryptocurrencies are safe, prevent hacking. And then finally, manipulations. And so the SEC's main, I think one of the main concerns is there's a lack of regulation. Some of the ETF sponsors are trying to put together regulatory, self-regulatory organizations to help implement regulations for manipulations. But at the end of the day, the problem with what the SEC is seeing is a lack of understanding of the markets and a lack of trading issues. So Bitwise came out, and maybe you can talk about this, your presentation to the SEC, and came out with different similar markets, where they were trading, how liquid those markets were, to show that certain markets are less liquid than others. And so tying those markets into a valuation would be helpful in those situations. So I think that's the number one issue, is making sure that investors are protected, that there's enough information out there, that the markets are liquid enough so that if they need to liquidate, they can.
Okay, so those four issues that you mentioned, valuation, liquidity, custody, and manipulation, I remember the SEC laying those out in January of last year in a letter that they wrote to ETF sponsors at the time, basically saying, these ETFs aren't ready, please withdraw them. Since that time, though, I'm just curious for your take on this. Most of the writing that they've done, especially in the orders disapproving ETF proposals, have focused only on the manipulation issue. So is it your sense that even if the industry was to overcome the manipulation issue, the SEC would just pivot and start saying one of these other issues also needs to be worked out and still wouldn't approve an ETF?
Yeah, right now, I mean, on the custody aspect, I'm not aware of any qualified custodian that can be a qualified custodian for those ETFs. At least they haven't been approved by the SEC. So that's still a step that needs to be taken. So yes, I think there's going to have to be some type of satisfaction by the SEC to move past just the manipulation. That was just the first. And if you look at the markets, and one of the issues was if you look at Bitcoin in a market, let's say overseas versus the Bitcoin price, let's say in the United States, you could see wide variations. It's something that Matt and his group identified. And from a regulatory perspective, and I think Tony would probably agree, that causes you concerns.
Right. So Matt, I'm curious for your reaction to this. What would happen in your mind if the SEC said, thanks for finally explaining away all of this manipulation stuff that we've been asking you about for years, now we're going to deny your ETF because of a custody issue?
Yes. Well, interestingly, so our 226-page report to the SEC addressed all of those issues, including custody. I actually think custody is, I think there's a nuance there. I don't think custody is a big issue. In January 2018, when they wrote that letter, it was, but the custodial market has matured dramatically. At that time, there were only 3 custodians with New York trust charters. None of them had insurance. By the end of this year, there'll be 11, and Coinbase Custody carries a $255 million insurance policy from Lloyd's. The market has matured dramatically. What we hear from the SEC actually is a little bit more nuanced. Their concerns have pivoted in part to audit and proving exclusive ownership of crypto, which ties into key ceremonies and things like that. So I think custody is actually not the gating factor. I still think market manipulation is the primary one. And within custody, I actually think it's audit that's going to become sort of a new focus that people talk about as we move down this path toward eventual approval.
Very interesting. So Tony, I want to get you into this conversation. Obviously, you do a lot of work at NASDAQ overseeing market manipulation issues. Can you tell us a little bit from your perspective about how you handle those kinds of issues in the traditional markets and how that might apply to crypto as well?
Yeah, sure. Firstly, when I first started talking to a lot of crypto platforms, I encountered 2 fundamental misconceptions about surveillance and market manipulation. The first misconception is that a lot of the manipulation practices that occur in financial markets aren't possible in crypto markets because of the nature of the technology or the products being different. Right? I have seen the crypto markets now, and I would say that is patently false. Right? A lot of the techniques that we're seeing and we're talking about or hearing about today, such as wash trading, pump and dump schemes, a lot of those schemes exist in different forms back in the 1920s, right? Back in the not the Great Recession, but the Great Depression, right? The second misconception that I've seen around crypto, like surveillance and regulations, is that it's not the responsibility of that venue or platform. They're just facilitating trading, right, between consenting adults or between different participants in their platform, right? And it's really very much about the market, the hand of the market, like taking on that role. The SEC, right, and I think it's generally agreed in financial markets that is not the case, right? There is a need for people who are opening or running a market to ensure that the investors in their marketplace are protected from manipulation, from fraud, from other bad actors.
And to step back for a second, I feel like we talk a lot about this buzzword manipulation without digging into what that actually means and what it looks like on an order book. So you just mentioned wash trading and pump and dumps. I think the other main type of manipulation that comes to mind is spoofing. Could you tell us a little bit about what these things actually are and why they're an important issue that regulators want to look at and get under control?
So I'll say so spoofing, let's go through spoofing. So spoofing is when you put orders into the order book, right? Not with the purpose of trading, but with the purpose of attracting volume in one direction or the other, right? You're essentially creating a supply on either the demand or the buy or the sell side of the book, right? With the purpose of trying to push the price. Spoofing is not good for the market because the key aspect of why people want to trade on market is because they believe that the price on the market is fair and efficient, that it represents the actual price that people want to buy and sell that good or service or product. If people are manipulating the price of that security, then your marketplace is no longer fair, it no longer has integrity, and people can't trust the prices on their marketplace. If you can't trust the price on a marketplace, people simply will not trade on that marketplace. And that applies for crypto, that applies for buying or selling cars, it applies for stocks as well.
And in your work, how do you detect, to the extent that you can share with us, what do you do to detect or prevent or report on manipulation when it is occurring in the market? So
we have a fairly advanced surveillance platform, which we built ourselves and provide to others called Smarts, which actively monitors in real time all trading activity that is happening in the marketplace, right? So we're looking for patterns of spoofing behavior, patterns of pump and dump, people who may be trying to push the reference price of that day in a certain direction or another, right? We also then have a team, which is a dedicated surveillance and compliance department, which are reviewing the marketplace. Generally, they're reviewing the market for 2 things. One is really about fairness, so what we discussed around manipulation. but they're also reviewing it for market orderliness. So there could just be a mistake, an algo might be going crazy, but that also creates mispricing, right, incorrect activity in your marketplace that you need to manage.
And so with that understanding of how a well-functioning, well-regulated exchange in the traditional space handles this type of issue, what can you tell us about crypto exchanges and why or whether they are or are not doing that same type of surveillance?
I would say initially it was a lot of misunderstandings, right? And there was a lack of awareness of what trade surveillance was and the role it had in a well-functioning marketplace. I think a lot of that is gone. I think the market has matured more, but also I believe, just as we were talking about earlier, that there are a lot of problems that venues face, right? And this may not be number one in the list of problems or the fire that they're putting out right now, right? I believe it needs to be, right? It needs to have a higher profile, but that would be, I would think, the main reason.
I just throw in that the BIT license, most people don't know this because it's not in the main part of the documentation. The BIT license requires exchanges to have market surveillance technologies in place and to report examples of manipulative behavior. 6 of the 10 real spot exchanges have BIT licenses, and they've contracted with software providers like Arisium and NICE Actimize to put those in place. So there's more surveillance than I think is popularly conceived, but you're absolutely right, it's not perfect. But it has really changed in the last year or so.
Yeah, and definitely the comment about licensing regime, I think what we saw with the BIT license around requiring a surveillance platform, that will start becoming more common in other jurisdictions as well.
Yeah, I agree.
And so Keith, drawing on your experience, both with the SEC and in private practice, what do you think it is that the SEC is looking for in the crypto market before they'll be willing to put this market manipulation issue to bed? Are they looking for no manipulation at all in any of the spot or derivative markets, or something else?
Yeah, first of all, let's step back and try to figure out why the SEC really wants to focus on manipulation, and I think they will get to these other issues as well. Manipulations are very, very, very difficult to prove. If you look at the number of manipulation cases that the SEC or CFTC has brought, very, very few. They can charge fraud, but the manipulations are difficult because of the proof that is required. There's an intent requirement. You have to show that they intended to artificially manipulate the market. You have to show causation. And so these things are very difficult to prove from an evidentiary standpoint. And so I think that's one of the reasons the SEC wants to make sure, and they're focusing on the manipulation issues here.
Got it. And one question I'll open up to the whole panel. There's one train of thought that says that the SEC is using the ETF approval process as essentially an excuse to force the industry to perform this type of surveillance so that they can pursue those types of enforcement actions. Whether or not that's appropriate, I guess, is open for debate. So I'm curious what the panel thinks about the SEC using the ETF approval process basically as a justification for trying to force a change in the industry.
I have an opinion, but I don't
Go
want
ahead.
to. But I will if no one else will. I think the SEC is using the ETF approval process as a way to learn about this industry, but I don't agree that they're trying to subtly enforce improved regulations. And the reason is because they've made explicitly clear in the Winklevoss rejection that it doesn't have to be the case that the underlying spot markets are surveilled, that it would be sufficient to allow an ETF to be approved if there is a regulated derivatives market, like a Bitcoin futures market, that is large in size, such that if someone wanted to manipulate the spot market, they would also have to act in that futures market. So they've given an out for the industry to get an ETF approved without comprehensive surveillance sharing agreements in place on the spot exchanges. Now, I think they're pleased that the market is maturing, but the market was going to mature anyway. We're going from an anarchic past to a regulated future, and I think it's just part of that spectrum.
Yeah, my view is that I think that the industry needs that prod, right? It does need that prod from the regulator, and I suppose in consideration of a much more explicit ruling or requirement or mandatory requirement of surveillance, right? This is a good prod for the industry to get their ducks in order, right, before it becomes much more of an issue.
I just toss in one more thing. For people who aren't familiar with the ETF industry, it's not atypical for it to take many years for a new asset class to be open. It took 7 years for levered ETFs to be open. It took multiple years for bond ETFs to be open. Multiple years, $12 million in legal fees for commodity ETFs to be open. So crypto moves on its own time scale, but 6 years is not like out of the bounds of normality for the SEC.
Yeah, and also a good point there. And it is also quite common for these new products for the SEC to use guidances such as this, rather than an explicit rule framework immediately.
Great. So I want to move on with our last 10 minutes to what happens next and what it's going to take to actually get one of these ETFs approved based on the proposals that are currently pending. So Matt, I want to go to you to start this off. What the SEC has said is that it needs to see a regulated market, surveillance of a regulated market of significant size. And Bitwise, as you said, has the leading proposal in that your deadlines are coming up sooner than anybody else's. In fact, there's a deadline for the SEC to make a decision about the Bitwise proposal this Thursday, so just 2 days away. Can you tell us about what the argument is, a very interesting and creative argument in my view, what that argument is that you're making to the SEC about why manipulation shouldn't stop an ETF from being approved now?
Yeah, so in essence, when the SEC set up this framework of a surveilled market of significant size, it seemed like an impossible trap because there was $6 billion in reported spot volume on places like CoinMarketCap, and let's say the Bitcoin futures market was $100 million. 100 million is a lot less than $6 billion. But those of us in the crypto industry know that a lot of that volume is fake and not real. So what we proved in our study was that 95% of the reported spot Bitcoin volume is fake or wash trading and not real, not engaged in price discovery. And the actual spot Bitcoin market was only 273 million at that time. Obviously, 100 million is a lot closer to 270 million than it is to $6 billion. Since that time, the spot market, the futures market has continued to grow. So for instance, yesterday, there was $1.2 billion in Bitcoin futures traded on the CME, which was 2x the size of the largest single spot exchange, Binance. So our argument is, if a market is 2 times bigger than the largest spot exchange, that is significant, and therefore we meet that qualifications. And we support that with the other side of the argument, which is that after you remove this sort of miasma of bad data that attends this fake wash sale trading, all of the issues that we were talking about earlier in terms of aberrant pricing and stuff goes away. Once you look at the real data from real spot Bitcoin exchanges, Bitcoin trades at a single price on every real spot Bitcoin exchange around the world. The average deviation is somewhere around 15 basis points, and 90% of the 1% deviations in price between any single exchange and the integrated price are removed within 10 seconds. So it is an extremely efficient market. It's just you can't see it because there's this terrible data on top. So our point to the SEC is we satisfy the requirements by showing that the futures market is significant because we change the denominator of what the spot market is to the real size. And when you do that, you have a very efficient market, and therefore they should approve our ETF, and we're hopeful that they believe that.
So I think it's a really interesting argument. I'm curious for the other panelists' perspective on this. But one way of looking at it, as you said, is there is a way to take this market that looks a little bit messy, but use some really good analytics to narrow it down and find some really efficient, unmanipulated volume that you can base pricing off of. On the other hand, you're going to the SEC and saying to them, most of this market is manipulated, which is sort of a rough thing to tell the regulators that are looking at the market. So I'm curious what the other panelists think about this argument.
So let me jump in real quick. Just because you have an illiquid market doesn't mean that it's being manipulated. Okay, there's a recent case, I think it was in late 2018 in the Southern District of New York. It was CFTC versus Wilson. And Judge Sullivan looked at the CFTC's manipulation claim and denied it. They didn't prove a number of things. But one of the things he said there is just because you have a illiquid market doesn't mean that it's being manipulated. In that situation, you had a participant on the IDEX electronic platform, and the CFTC claimed that they must have intended to inflate the settlement price in order to gouge their existing swap counterparties because they were the only actor. And Judge Sullivan criticized the CFTC in that case and denied their request for relief.
And just to jump in, not only did the judge criticize the CFTC, he used some pretty strong language. He referred to them as flat earthers in terms of the quality of their arguments. And a shout out to my former firm, Cobra and Kim. They were the ones who litigated that case. So great job to them for getting that result. Tony, what do you think?
I have a slightly different perspective, right, which is like, my view is that irrespective of the ETF requirement and the SEC guidance, the industry needs to perform proper surveillance and have proper processes and best practice in place to reduce manipulation, right? I mean, the ETF, say we did achieve the goal of having the approved ETF, right? And the same amount of manipulation is happening now in the marketplaces, and that a lot of venues aren't using the best practices now. That's still not a great marketplace, irrespective of if the ETF is approved or not, right? So the platforms do need to look at this. They need to use this as indication that they need to clamp down on manipulation in crypto markets, right? And that just has to be irrespective of ETF approval or not.
Great. So in the end of the day, ultimately, it's the commissioners of the SEC who would decide whether an ETF is approved or not. In the first instance, it's the Division of Trading and Markets staff that makes that call. But if the majority of commissioners want an ETF to be approved, ultimately it gets approved. So one way of thinking about this issue is just that the commissioners could change their minds about whether an ETF should be approved or not. There is already one commissioner who seems very much in favor of approving an ETF, Hester Peirce, who spoke at this conference yesterday, I believe. What do we think about the possibility that nothing in the market changes, but the ranks of the commissioners change to individuals who believe, like Commissioner Peirce does, that an ETF should already be approved, and one gets through that way? Is that possible?
It's definitely possible. I would even say that there's probably more support at the commissioner level than most people understand, although the commissioners are changing all the time. Jackson, who's relatively pro-crypto, his term is up in something like 10 minutes. So it's moving over time. It's definitely a political question. If you get past the staff, it rises to a political issue. And I do think actually that's important. A lot of ETF proposals have tried to navigate a narrow technical way to get an ETF approved. And the SEC is not going to do it. They're going to approve an ETF when they feel confident that it's safe and secure. So it is important to watch what the commission is doing.
Keith, I'm curious from your experience at the SEC, what is that relationship like between the commissioners who are individuals with their own opinions and perspectives on these issues, and then the staff who are working in the divisions on the front lines of these kinds of matters?
Yeah, I think you can see that certain commissioners have strong views on this issue, and there's others that are trying to argue that that the investor protection is paramount here, and are more concerned. So the relationship between the staff in trading and markets right now, and that's where this is kind of sitting, there's fluidity right there. I mean, one of the issues that the commission has tried to do is get more quote-unquote czars who have experience in cryptocurrency. So they're putting people, for example, Val Stepanek, who I think spoke yesterday as well, was in enforcement, now she's in corporate finance, technically, and so they're trying to get more personnel there so that there's better communications and understanding.
Great. Well, we have only a little over a minute left, so I will put to each of you the question posed by the title of our panel, when ETF? Matt?
As you know, I'm not allowed to answer that. That would put me in a penalty box with the SEC and delay our approval 1 month. I will say, if there's something you want to do to help get an ETF approved, you can submit comment letters in support or against ETFs, and the SEC does weigh those carefully. So to the extent you want to improve when ETF, I would encourage you to do that.
I, as a regulated entity, I'm also in a similar position. We really picked the wrong question here. So I also can't pick a date, but I would say in terms of the when ETF question, and this kind of goes back a little bit, it is a learning process at the SEC, the CFTC, and at those organizations as well, right? So they are also going through that process, probably not as fast as the people in the room here, but they are going through our process, right? So I think that in the past year they have prioritized, but a lot more resourcing on it. There is a little bit of frustration potentially in the wait, but it will come when it comes.
All right, so we'll leave it to the lawyers. Keith, what do you think?
I'm optimistic, and I do think that it is going to pass. I would suspect that, I would say that it's going to happen this year. There's a lot of political pressure, I think, happening right now. A lot of lobbying going on, I think, by various entities and organizations. If you look at, I think one of the issues that the SEC has to really grapple with is I still think they're looking at valuation and custody. And until those two things, they're completely comfortable, I think there's going to be some further questions. You look at the number of comments that were provided to the SEC, I think there was about 26 comments. A lot of them were not substantive. And I think that also is a little bit of a concern. You didn't see a lot of academic people weighing in to these, to the comments. When I reviewed them, there were a number of them that were a paragraph long. So I think that just shows that there's a little bit more needed, but I think it's going to happen. I think 2019 is the year.
Great. Well, we are out of time, so I'll give you my one-word answer, which is eventually. And that's all I've got. Thanks, guys, very much.
Thank you.